Investors are counting down to the opening bell about 15 minutes away. The latest GDP numbers fresh on their minds, I'm sure. Jim Paulsen is the chief investment strategist at Wells Capital Management in Minneapolis. And Jim, good to have you back on the program. Judging from what's going on right now in the futures and the bond markets, it doesn't seem like investors quite know how to take this GDP report.
Yeah, I think, Betty, it's pretty much in line with what people were looking for. You know, the consumption's number is a little stronger. The overall headline number is a tenth lower. But by and large, the composition of it is about what people are looking for. Consumption adding a substantial portion. We had weakness in housing and construction. We had a subtraction from our trade sector for the quarter. We had good spending on equipment by businesses. Right. I think most of this was in the numbers. So, it's a good number, but I think by the time it actually got released, people have pretty much caught up to that. Yeah,
they have. But don't you think, though, that it hasn't given, really a strong sense to people who've been on the sidelines whether or not the conviction is to sell the market or to buy the market yet?
I agree. I really think that my own sense is that this is going to get stronger here in the second quarter, and we'll have a bigger number. We're talking about consumers doing 3.6% real contribution to growth here in this quarter without much job creation at all, and with still fairly low confidence, at least by the measures that we report. If you look forward over the next several quarters, I think you got to believe jobs are starting to come back, which means income is going to get better and confidence is likely to build, right, both of which should help that consumer number. We know that profits have been really good, and the businesses are starting to step up. So I do think we're going to get better numbers, but I don't disagree with you, Betty. This number didn't do a lot whether you're a bull or bear on either side of that equation.
Yeah, right, which is why you're kind of seeing a confused market. Jim, before I leave you though, given the spending figures we've seen in this GDP report, what does that mean? You're going to go in the markets, buy into the cyclicals?
I think so. That's where I still want to be. I mean, I think the consumer discretionary might be a little bit ahead of themselves, but I think the economically sensitive areas are still where you want to be in this year. We are still, in my view, accelerating economically, and I think it's going to be a little while. I'd at least like to see the policy officials start leaning into the wind and tightening before I move away from cyclical exposure in the stock portfolio.
Jim, okay, great to talk with you, and have a good weekend. Jim Paulsen from Wells Capital Management.